On December 1st, 2022, Reserve Bank of India, the country's central bank, launched e-rupee on a trial basis in 4 cities in India: Mumbai, New Delhi, Bengaluru, and Bhubaneswar, through 8 participating banks. E-rupee is a central bank digital currency, or CBDC. So it's just like a physical rupee note, except that it's digital. But it's not that straightforward. To understand how it might immediately affect you, let's see what usually happens in a financial crisis.
So after the PMC bank fiasco last year, now the Yes Bank crisis. The depositors are asking, is our money safe?
Yes Bank depositors cannot withdraw more than 50,000 for a month. This after government and RBI placed the bank under moratorium for financial mismanagement.
सर हमारा हार्डन मनी हमें रिटर्न चाहिए, बस हमें एश्योरेंस चाहिए आरबीआई की तरफ से।
हमें सारा का सारा पैसा वापस चाहिए।
अब जहर खाने की नौबत आ चुकी है। मौजूदा सरकार को कुछ ना कुछ करना ही पड़ेगा इन सब के लिए।
पब्लिक के पास पैसा होते हुए घर पे खाने के लिए पैसे नहीं है।
बैंक अगर बंद हो जाएगी तो सब लोग रास्ते पे आ जाएंगे।
We are fully seized of the developments. So I repeat, the depositors can be assured that their money is safe.
Even if you have access to your funds and can withdraw them during a financial crisis, unlike these unfortunate depositors, your situation is not much better. You could transfer your funds to another bank, but no bank seems safe. You could withdraw your savings in physical cash and store it in your house, as many people in India and around the world did, especially during the second wave of COVID-19. But keeping cash in your pocket or your home is a risky thing to do. What if there is fire, or you lose it, or get robbed? This is where e-rupee or CBDC comes in and provides a safe way out. With CBDCs, at the touch of a button, you can move your funds from your bank account into an e-rupee account and be assured of their safety during uncertain times like a financial crisis. It's one reason 100 other countries around the world, including America's Federal Reserve and European Central Bank, are also exploring the launch of their own CBDCs. Why is e-rupee a safer alternative than keeping it in a bank? How is e-rupee different from other digital money we already have at banks or accounts like Paytm or Venmo? And finally, why is CBD such an important recent development with far-reaching consequences? For instance, e-rupee might put all the banks in the country out of business. Let's understand this slightly technical but fascinating recent development. If you look closely at a 100 rupee note, on the right side of the portrait of Mahatma Gandhi and just below the number 100, you'll find something written which says, "I promise to pay the bearer the sum of 100 rupees. And just below it is the signature of the governor of RBI, India's central bank. You will find this written on currency notes of all denominations in every country around the world. That's because a currency is a promissory note, an IOU, in which the central bank promises to pay the sum mentioned in the currency to the bearer whenever produced. A rupee note is the liability of Reserve Bank of India and indirectly the government of India. E-rupee is just like a normal rupee note that is also a liability of the Central Bank of India. It is in fact exchangeable one-on-one with the physical currency. The only difference is that it's digital, which means you cannot hold it in your hand or your pocket. You need an app or an account for this, at least initially. You can later use it without an internet connection, but you still need your phone. E-rupee is a safer place to store your money than a bank account or Paytm or Venmo during times of uncertainty, for the same reason that cash is safe. It is a liability of the central bank and is guaranteed by the full faith and credibility of the government of India, not a public or private bank that could go bankrupt. But when you deposit this currency into your bank account, you are converting a central bank liability into a commercial bank liability. Until the e-rupee came along, there is no option but to deposit your money in a commercial bank if you want to keep it liquid. You can invest your money in a mutual fund or buy shares through a brokerage, but those funds also end up at a commercial bank ultimately. Well, the only other option is to save it under a mattress or something like that. The government recognizes the importance of not letting banks fail and cause millions of people to lose access to their money in their bank accounts. That is why governments around the world have deposit insurance to guarantee their safety. But you now have government bank digital money that is free from credit and liquidity risk of commercial banks. Though the RBI issues the e-rupee, consumers will hold it in an account or a wallet with a commercial bank like SBI or Yes Bank. It is these banks that would be obligated to provide CBDCs on demand, not the central bank. Commercial banks would also be responsible for evaluating customers, providing account statements, internet and mobile banking, providing customer support through phone and email, and many other things that a normal bank has to do. So the commercial banks will maintain the central bank digital currency accounts along with their own interest-bearing deposit accounts. The CBDC accounts might not directly help banks earn profits, but they would attract customers who could then be offered savings or loan products. As of now, e-rupee works just like a digital version of a rupee note. The central bank does not plan on paying interest on these CBDC deposits. What's really interesting is that RBI can pay interest if it wants to and make CBDCs a more attractive destination for deposits. That would either put commercial banks out of business or shrink their scope of operations dramatically. Why should I move my money to an e-rupee account only during a financial crisis? I want my hard-earned savings to be safe all the time, especially when I'm earning interest on it. Why would I deposit money in a commercial bank account at all if CBDCs pay interest, right? And if everyone banks with the central bank directly, cutting out the commercial banks, they will not have any short-term deposits to lend out as loans. One of the most important functions of a commercial bank is to take short-term deposits that are redeemable on demand and convert them into long-term loans like housing loans or corporate loans. If CBDC accounts start paying interest, you will still be able to get loans or debt, but may not be from banks anymore. Commercial banks might end up becoming a much smaller version of themselves, concerned only with providing account statements, balance checks, internet and mobile banking, and customer support by phone or email. They could still be responsible for making fund transfers happen using payment networks like UPI in India or Visa and MasterCard around the world, but they would only administer the digital cash, not own it. That's because since e-rupee will be a direct liability of the central banks, they will own your deposits on their balance sheets as a liability to you. This is in contrast to commercial banks. Currently, when you deposit physical cash into a bank, the cash becomes the property of the bank and you are instead given a bank deposit, which is a liability of the bank to you. Now, paying interest on CBDC is one way to stop commercial banks from going out of business. There are at least two other solutions. One is to limit the amount that can be deposited in a CBDC account. So that means you're forced to keep some of your savings with commercial banks, even though they are the riskier option. Bahamas has done this with Sand Dollar, its CBDC. Bahamas is the first country in the world to launch a CBDC. The other solution is for the central bank to accept customer deposits with no limits and pass them on to commercial banks by lending it to them at its policy rates against a suitable collateral. The commercial banks can then give out loans as they usually do. These solutions are still being explored. Nothing obviously has been finalized yet.
Being shut out of the financial system has real consequences for people's lives, and it's often the most disadvantaged people who pay the highest price. I believe that this problem can be solved, and Libra can help.
I have a few more things to say, but for the richest man in the world to come here and hide behind the poorest people in the world and say that's who you're really trying to help. You're trying to help those for whom the dollar is not a good currency: drug dealers, terrorists, tax evaders.
Mark Zuckerberg's digital currency Libra was the wake-up call for central banks around the world. Otherwise, central bankers who are conservative types are not really known for their pioneering innovation. Cash is increasingly falling out of use, and digital payment systems, which are flourishing, rely on private firms such as banks, credit card companies, and tech companies, not central banks. Cryptocurrencies like Bitcoin and stable coins, which peg their value to dollar or other assets like Facebook-backed Team, formerly Libra, are also a threat, potentially eroding state authority. That is the reason so many central banks around the world, including the biggest ones, are launching CBDCs. Central banks hope to lessen the danger of financial instability from reliance on purely private payment systems. CBDCs, however, are not just a means of defending central banks' turf. Central banks also see some opportunities. Issuing digital cash is cheaper than minting coins, so long as it's protected against hacking. Cost of cash management in India, which includes printing, storage, transportation, and replacement of banknotes and coins, during the year ending March 31st, 2022, was almost 5,000 crores. crores or $600 million. This is before counting the cost of time delays and the environmental cost of printing paper money. CBDCs are expected to reduce this cost significantly. Governments will have an easier time monitoring how digital money is used, making it harder to fund criminal activities. A digital rupee or dollar would hinder illegal activities that rely on anonymous cash transactions, such as drug dealings, money laundering, and terrorism financing. It would bring off-the-book economic activity out of shadows and into the formal economy, increasing tax revenues. Small businesses would benefit from lower transaction costs, since people would use credit cards less often and these small companies would avoid the hassle of handling cash. Since CBDCs can be used offline also without an internet connection and are compatible with multiple devices, they can be a game changer for the financial inclusion efforts of governments. Digital currencies will bring unbanked citizens into the financial system, boosting economic development. It is hard to get a credit card or loan if you have little money. By creating a digital account for the unbanked population, CBDCs will facilitate easy availability of credit. E-Rupee would also give everyone, including the poor, access to digital payment systems and a portal for basic banking activities. Each individual or household could have a non-interest bearing account with the central bank linked to a cell phone app for making payments. Typically, if the central bank wants to boost the economy by stimulating consumption and investment, it can cut interest rates and make cheap credit available. But if the central bank already cut short-term interest rates to near zero, its options are limited. Though interest rates can be negative, technically speaking, a practical impediment at the moment is that savers can switch to cash, which has a de facto interest rate of zero. In a cashless world, however, central banks could in theory program digital currency to have negative interest rates, giving central banks new powers. Central banks could also use mobile wallets to make cash injections more direct. For example, quickly sending money to residents of a region struck by an earthquake. CBDCs might be the least noticed disruption on the frontier between technology and finance, but they might end up as the most revolutionary. By letting people deposit funds directly with the central bank, bypassing commercial banks, CBDCs could not only disrupt how banks around the world operate and how money is created, but also change how capital is allocated. They promise to bring about transparency and financial inclusion, among other benefits. But CBDCs also raise concerns about loss of privacy. Even if central banks try, ensuring anonymity for a digital currency is a challenge, as all digital transactions would leave some trail. Even with protections in place to ensure confidentiality and privacy, no central bank would forego the ability to audit and trace suspicious transactions. A digital dollar could threaten what remains of anonymity and privacy in commercial transactions. A reminder that adopting a digital dollar or a digital rupee is not just an economic but also a social decision. Thank you for sticking till the end. If you like this video, I'm sure you'll like this video too. And please consider subscribing. Subscriptions really help with the YouTube algorithm and in promoting the channel. I'm Sharat Mantravadi. Thanks for watching.